common misconception many buyers have is that they need 20% down to purchase a home. Today we're going to take a look at two of the most popular programs out there, the conventional 3% down program and the FHA 3.5% down program. Compare them head to head, see which one makes the most sense depending on the credit score. My name is Mike Thomas, the Mortgage Guy. This is your weekly update, and my job is to help our mutual clients open their front doors smoothly and efficiently as possible by choosing the right loan program. Thank you for watching. So today we're going to talk about low down payment programs, and we're going to look head to head FHA versus conventional. First of all, down payment. 3.5% down payment for FHA, 3% for conventional. Almost identical. Typically FHA is going to have lower rates and conventional, conversely, is going to be slightly higher. There is an offset to that. That is the upfront mortgage insurance premium is 1.75%. That is rolled in to your FHA loan. Or conventional, no upfront mortgage insurance premium is required. Oftentimes we can do lender paid mortgage insurance and not even have a monthly mortgage insurance with conventional, where we would have upfront and monthly with FHA. Monthly insurance premium 0.85% annually. And again, monthly mortgage insurance on conventional or lender paid is heavily influenced by the credit score. So higher scoring borrowers often fare better with conventional mortgage insurance, and lower scoring borrowers down to anywhere from 600 to 640, you're going to be looking at FHA, probably even up to 680. And we're going to take a look side by side at the numbers here in a moment. Mortgage insurance premiums currently permanent or non-cancelable for FHA. You can refi. There are some great streamlined refinance programs available for the FHA, but for now, those mortgage insurance premiums are non-cancelable. Whereas conventional, once you hit 78% loan to value of the original appraised value or sales price, that will come off automatically. Borrower can request it at 80%, or you can refinance if there's enough equity in the property. Here's something else to consider. With FHA, you can get up to 6% help from the seller for your closing costs. So your closing costs and prepaids can be paid for by seller help. With conventional, you can only go up to 3%. That sometimes is what causes people to need to go FHA. Okay, so here we have FHA versus conventional. 680 FICO score, 680 FICO score on conventional, and 740 conventional credit score, all borrower paid mortgage insurance. This is a $300,000 purchase. As you can see, these rates are about 0.5% different for that 680 apples to apples. So there's a 0.5% better rate on an FHA typically versus the conventional, unless your score is higher, and then you're going to have less loan level price adjustments. It's going to bring your rate down on the conventional and may make it worth it going conventional. So without going into all the details of this, looking at consistency with taxes and insurance, you can see mortgage insurance is lower with FHA than the orange category here, but higher than the far right category. Total payment difference, $181 more for the conventional. Center conventional. On the right, it's $2 more than the FHA. So pretty much apples to apples there. However, when we go to the next slide and we look at the wealth impact over time, so what's important and what I always show my clients is not what your payment's going to be today, although that's very important, but also how is this going to affect your wealth 5, 10, 15 years from now or longer if you plan on staying longer. With the FHA program, you can see that's the baseline, that's the zero. 97% conventional at 680, that's the lower yellow/orange line. You can see that's worse than FHA. 97% conventional with borrower paid mortgage insurance, we're better all the way to the 10-year mark, and then we take off. And that's because the mortgage insurance drops off at that point. So you can see that the 97% conventional with borrower paid mortgage insurance at $740 is the better deal if you have the proper down payment and you have the cash to close. You don't need that extra money from the seller with the seller contribution. So thank you for your time in watching this today. If you have any questions, please feel free to call me. 443-752-4173.